Yeah, so I just kind of drafted a little setup here just as you were talking about it, right? So the Monday low is 1810. We just talked about that lick being 1805. Maybe you get a tighter entry below 18. But, if you're watching this live going into CPI tomorrow, and you see price come down below the Monday low, it sweeps it. So, every trader is different. Some look for a reclaim of the Monday low. Some will just punt it. Maybe it's as simple as you get a sweep to wherever it is. It comes back up. It trades above 1810. Maybe you mark it in and then you set your, stop wherever the low is put in. Let's just pretend it's, 1780. And you get in at 1810. And then you're playing at minimum, in my mind, for the Monday high, right? That we kind of talked about last week, similar setup. And then once you kind of get above 1880s, this is that SSR zone we touched once before we broke down. And then I can see this trading to low 1900s post CPI going into the rest of the week if we kind of get that sweep and reclaim and it's one swift move. So it'll be interesting to see kind of how things play out going into tomorrow.
Yeah, so like this is a less granularity. So your point about that 1804, like if we're dialing in the biggest licks, right? So you take that, you're definitely coming for this 1885, and that's
your Monday high.
Yeah. So
and then they'll lick right above that, right? The purple
1902, 1906.
No, the big bubble to the left that's on tap still.
Oh, this one.
Yeah, 1935. Yeah, see, I can see that. I can definitely, that kind of fits within that SSR zone.
Right. So, you guys now are seeing us formulate plans in real time. Because I actually wasn't looking at this, but it makes a lot of sense. I just think you're going to get an exhaustion point if they flush it.
Yeah, 100%.
How offsides the shorts are can just, around these market movements can be violent squeezes.
Yeah. So Mohammed asked another question. What is the sentiment right now, bullish or bearish? What do you think, Trip? And then I'll give you my take on it.
You mean what? Just gauging Twitter?
Just gauging sentiment for the word sentiment itself.
It's kind of mixed for me. I mean, there's like plenty of bullish people out there. There's plenty of bearish people out there. And you know what? Neither is one. We're ranging. Okay?
We're ranging. So exactly.
I'm bullish because we're near the range lows.
It's so much easier to be bullish at the range lows and bearish at range highs. Whether you're right or wrong, that's always usually the right stance. Oh, wow. That's negative on Sui. That's very negative on Sui.
Yeah, that was Mitch is in here. I saw your post about Sui with the funding for a squeeze.
I love it.
Yeah, and you'll have these anomalies and stuff. I mean, dude, look at Lido the other day. It bounced 20% off the lows. Like,
yeah,
that's another thing that, to me, like, if you look at the start of the year and the lows, and then if you look at the highs and like altcoins, some of them are coming down into like high time frame, like 61.8 fib retracements, like sweeping range lows and stuff. Heavy shorts. That's how you like. Look, they probably can continue to go down. Bearish market structure is very apparent with a lot of them, but like there's some crazy bounce opportunities. And if BTC does one of these things where it flushes and rips up, and so does ETH, like there'll be some pretty crazy situations similar to what Lido did the other day. Typically,
that's a good point you mentioned. Yeah, so that's a good point you mentioned. When we look at all this liquidity stuff, guys, this is really all derivative positioning, and you have to keep in mind derivatives don't push the market one way or another. I mean, they can for a short period of time, but spot buyers are trendsetters. They actually send the trend to whatever direction they so choose. So when you have a very clearly defined range or not so clearly defined range, and you see these liquidity profiles and you see, longs coming in at the lows, but it's derivative longs, there's less likely of a chance for that support to hold than had you seen shorts come in at the lows. And the reason being is pretty simple, right? Derivatives traders are by nature just poor individuals who need to, use leverage to kind of achieve their goals. So when you see shorters coming in at the range lows, selling into support, and if there's not a spot seller behind that pushing price below support, the likelihood that those derivative sellers are going to puke and unwind their positions becomes very high. So for those of you who trade order flow, you can probably read the tape and see that in between spot and derivatives or perps. But point being is, if you're just looking at liquidity profile the way we do, it would kind of behoove you to kind of reassess in real time as we get to certain levels, whether it's support, resistance, and identify, are the red circles coming in at support, and are they getting rewarded? Is price doing a good job of going lower after they opened up? If the answer is no, that failed bearish breakdown provides an opportunistic bullish setup. So just one thing to keep in mind as we kind of move into tomorrow.